All right, joining us now on what the technicals are saying about Nvidia and what's next for the financials is LPL FInancial's Adam Turnquist. Adam, great to have you with us. We've got a bunch of stocks at new highs today. So what's your forecast for Nvidia?
Right now, when you look at Nvidia, it's been a pretty impressive breakout. Finally broke out of this consolidation range, we'll call it, cleared 130. And if you measure that move, you apply it to the breakout level, the technicals here are telling you maybe 170, 175. Of course, we don't cover the stock, but that's the technical objective-based price move. And we're finally starting to see some relative strength in the name. Hasn't had a new high since June, but it's rallied 40% off the August lows. That's certainly showing some great momentum coming into Q4 and maybe enough to turn the weakness in the semiconductors over and create an inflection point in relative strength there.
Which bank chart looks the best to you?
I think we got to talk a little bit about Morgan Stanley because this one's been really interesting. It's been in this consolidation phase for, call it, 3 years, finally breaking out through resistance at 109. And it looks like this rally has more room to go. It says the longer consolidation phase, the more meaningful the breakout. So technically, we view this as a significant breakout, finally clearing that key resistance level. I think when you look at earnings coming up, we heard from JP Morgan, Wells Fargo, asset management revenues and those fees look pretty good, not to mention investment banking, trading, and sales also looking pretty good. So some potential catalysts to drive this rally higher. And then on a relative basis, we're also seeing an inflection point when you look at Morgan Stanley versus the S&P 500, reversing a downtrend and starting to show some relative strength over the broader market.
All right, so we mentioned it's a 2-year birthday of the bull market. Are we going to be sitting here next year celebrating the 3rd birthday, or is it going to be over?
I think we will be here. I don't know if we're going to talk about 27% annualized returns for the S&P 500. That's what we had during the first 2 years. Year 3 tends to be a little bit more challenging, but the good news, it's still positive. Depends on how far you look back, but average year 3 returns right around 5%. And the other good news is bull markets tend to be durable. They last on average, at least since 1950, about 60 months, so 5 years, suggesting this bull market has a little more room to run here.
Adam, how about the relationship between either some of these sectors and the overall market? So semis typically have been the leader for this market, and they've resumed that leadership. How about banks, though? The cyclicality of the banking sector, the goodwill from, the investor community. In other words, people are reasonably fired up, especially in a more benign credit environment where growth isn't falling apart. How about are banks leadership here? Can they be, or are they part of that barbell?
Because banks are leading on several different metrics. And when we started to see semiconductors give up that leadership status earlier in the summer, we asked ourselves, okay, who's going to pick up the slack? And I think financials have done a pretty good job of doing that. When you look at how many financial stocks are outperforming the S&P 500, over half. That's the highest across all 11 S&P sectors. They also have some of the best momentum with the most stocks clearing their important July high resistance levels. Even though valuations aren't as cheap as they used to be, though, I still think there's some relative value and performance here for the financial sector.